Tonight on Business Live, Ghana's business community is troubled about the rise in the cost of credit. It follows an increase in the cost of lending to 19%. We have an analysis on the input of the banking sector in all of this. Also, an exclusive interview with Israel's ambassador to Ghana on what remains of Israeli investments to the country amid high costs of doing business.
It is not insignificant, but it is not too vast. Like we're talking about a couple of hundreds of millions in terms of trade, but this is not the full potential, far from it.
Plus, shareholders of Standard Chartered Bank secure 2 cedis 57 pesos per dividend for the 2021 financial year after significant growth in the year in review.
The bank's continuous commitment to create shareholder value remains central to all our long-term strategic actions.
We have all these stories and more coming up shortly. Do stay with us. Hello and welcome. I'm Charles Ayitey. Tonight, Ghana's business community has expressed concern about the rise in the cost of credit. It follows an increase in the cost of lending to 19%, coupled with the recent shoot-up in inflation to 23.6% in April alone. The Association of Ghana Industries, AGI, the Ghana National Chamber of Commerce and Industries, major umbrella business organizations are all troubled about the trickle-down effect of these increases on the cost of credit. But helping us to explain the role of the banking community in all of this is banking consultant Otuo Champon. We're grateful, sir, that you could join us on Business Live. Let's first backtrack a bit to chronicle the response of banks to the previous reduction in policy rates by the Bank of Ghana. How responsive has the sector been since?
Very responsive in the sense that initially interest rates were in the 30s. It came all the way down to around 19%. So it was really responsive. The rate of response is what probably needs I think that it's not instantaneous, that once they increase the policy rate, immediately the lending rates also come down. But eventually they did come down.
Well, some business organizations, including the Chamber of Commerce and Industry, have described the banking sector as a cabal which responds perfectly to, policy rate hikes, but slacks whenever there is a reduction. What's your observation on this?
Well, that is to be expected. And I think it happens in all industry. If you take the fuel industry, we have the same thing. Because the architecture is such that when the reduction happens, you've got to put a lot of things in place. In that money is always given out on a long-term basis, and therefore, if you need to adjust, it will take a bit of time to adjust. But eventually, the adjustment does come. So the business community is always all the better for it.
But from your perspective as a banking consultant, what do you think should be the way forward? What role can banks play in ensuring a special regime for SMEs and the business community regarding cheap and accessible credit?
Well, the word that cannot be used is cheap, because the economic conditions we are in do not dictate cheapness in anything. We all know there are hikes in prices, and therefore it's same with the cost for the use of money. But with the money, there are two sides to it. If you send money to a bank where the bank is using your money, you get a higher rate of return in terms of interest rate. And equally, if a business borrows from a bank to use the bank's money, they also have to pay a higher price for it. So it's a give and take on both sides. And therefore, what the banks are doing is trying to accommodate their customers in such a way that they will structure the loan flexibly to enable them to meet the higher interest rate. And equally, businesses are also be put in a situation where they also have to restructure their activities in such a way that they do not pass on all the full cost to the customers in order that they can generate some business. If they intend to pass on the full cost, it's going to affect them because sales will go down. And if you can make a CD on a sale or 2 CDs on a sale, you're better off if you can sell more at the rate of a CD profit than 2 CDs when you are selling less. So both sides have to play a role in ensuring that the system works.
Now, not all Champon, grateful that you could join us with an analysis as a banking consultant on matters regarding the access to credit, the concerns raised by the business community. Let's still stay with the banking sector because shareholders of Standard Chartered Bank are to be paid 2 cedis 57 pesos per share as dividend for the last financial year. Now, this was after approval of the ongoing annual general meeting of the bank. The dividend payout will represent 48% jump over the year 2020. Here's more. We shall try and fetch that report for you in a subsequent bulletins. But moving away from that, members of the Venture Capital and Equity Association are urging government to review the requirements for foreign investors entering into the country's capital market. According to the association, there are some components of the law that serve as a disincentive for investors, hence the need for a review. The call was made during the launch of a legal and taxpayer on the suitability of Ghana for the consideration of private equity and venture capital. Here's more.
Private equity fund environment has not been too friendly to foreign investors as compared to countries in Africa like Mauritius and other European markets. This has led to the formation of the Venture Capital Equity Association to collaborate with stakeholders and regulators in making the system more sustainable. At the launch of the legal and tax paper, Chief Executive for Oasis Capital, Matthew Buedueje, told Joy Business that stakeholders are making a push for the Securities and Exchange Commission to take a critical look at some requirements in the law.
I was only concerned about the broad nature of the definition of trading business. That was done to be too encompassing, which inadvertently has affected some investment, that foreign direct investment that people would otherwise make into a venture capital or private equity firm may come under that qualification. So if we set a threshold as high as $1 million for that category, then it means that there is a whole gamut of a large population who may have investment that don't meet that requirement, who may not necessarily be able to make investment. Then you lose that opportunity.
The association has made a series of recommendations to the Ministry of Finance to consider in subsequent policy documents. Yao also Brimpong is Chief Executive of the Venture Capital Trust Fund.
One key aspect that we need to get right is fund domiciliation, because if you don't have the funds here, venture capital, for instance, we are supposed to invest in funds that are domiciled in Ghana. So if you have them, some funds may want to raise funds here, but because they are domiciled outside Ghana, we cannot invest in them. So the issue of domiciliation is very, very key for venture capital and the private equity association as well, and that is what the association is trying to address. And the two key issues are tax issues and then regulatory issues. Once we get those right, we will be attractive to foreign investors, and then we will get a lot of fund managers coming into the Ghanaian system, and it will open up the economy. Businesses will get a lot more funds to access, and then the economy will benefit at large.
The Venture Capital and Equity Association believes that Ghana stands a good chance to receive private equity investments, but more interventions are needed.
You're still watching Business Live. Now, amid the gradual increase in the cost of living and doing business in Ghana since 2021, Israel says Ghana is still the most attractive venture for investment and trade partnerships. Ghana's trade volumes with Israel tanked significantly amid the COVID surge, just like any other economic partner. But with inflation hitting 23.6%, what remains of the investment interests of the country? Her Excellency Shlomet Sufa is Israel's ambassador to Ghana, and she's been speaking exclusively to me on this topic. Take a look. Having this conversation on the back of, Ghana emerging out of the constraints of COVID, not just Ghana, but Israel and around the world. We do know that even before COVID, we saw the Mashav initiative and the Israeli embassy, the government of Israel to be specific, helping to aid in specific investment patterns in agriculture and various sectors. How has this initiative fared post-COVID-19?
So it's important to note that Mashav has been working with Ghana for decades now, since 1958. Actually, Ghana can pride itself as being the inspiration for the creation of Mashav, which is the International Development Agency of Israel. It is part of the Ministry of Foreign Affairs, and they've been working all over the world with developing countries, but there's always a main focus or a special focus on Africa. And in Ghana, we've been working hand in hand since 1958, ever since our then Foreign Minister Golda Meir visited Ghana and West Africa. So we've been focusing mainly on agriculture, health, and innovation, but we've been doing other sectors as well, working hand in hand with the government of Ghana to answer the needs of Ghana in terms of development, and in line with Ghana's government development programs, such as planning for food and jobs, and other programs and schemes that are aimed to assist the economy and development of Ghana.
Post-COVID-19, we have seen a drain in the agri sector. Currently we are having the agriculture value chain in Ghana under some stress. Economists are predicting a possible food shortage. What's going to be the intervention from agri companies from Israel in terms of the targeting of this sector post-COVID-19?
There's a lot of work that is being done on agricultural projects by Israeli companies in Ghana. I don't want to name specific companies, but Israeli companies in Ghana work for better crops and more fields that will yield more crops than usual, bring in Israeli technology. And if we go back, for example, to the Mashav work, we are working with the agricultural sector to get more people acquainted with the Israeli technologies, with the Israeli methodologies of agriculture. There's another program that we are very happy to have together with the Ministry of Food and Agriculture, and it's called Foreign Training in Agriculture, where for around 200 students of agriculture from Ghana will be traveling to Israel to go through an 11-month program of both academic studies and hands-on experience working in Israeli farms, getting acquainted with how Israeli agriculture is all about, and then come back and bring in that knowledge with them, and with the support of the Israeli Embassy and the Ministry of Food and Agriculture will continue to create their own projects, agribusiness, and benefit the agricultural sector in Ghana.
So with all these interventions, could you put a monetary value to the investments that Israel is making to Ghana's agri sector, even post-COVID-19 alone?
Well, that's a very good question and not an easy one to answer. I would say that all in all, if we look at the volume of, say, trade between the two countries, it is not insignificant, but it is not too vast. Like we're talking about a couple of hundreds of millions in terms of trade, but this is not the full potential, far from it. And when it comes to investment, specifically in agriculture, I don't have a specific number, but I can assure you that there's much more to be done, and we hope to see more Israeli companies come to Ghana and much more exchange, be it business to business or in lines of development between our two countries.
I want to pick up on the point you made about the trade volumes between Ghana and Israel not being enough, because it's quite obvious. Even post the pandemic, even before the pandemic, we have seen trade volumes between Ghana and specific countries around the world dwindle, and others have attached it to some issues regarding supply chain constraints. Others have also said that it could be matters regarding geopolitical frameworks, the conflicts in Ukraine currently, the post-COVID-19 constraints on, the importation and export of goods and services. But from your perspective as ambassador, what do you think could be accounting for the shortfalls in trade volumes between Ghana and Israel?
There is an ongoing trend of increasing that volume of trade. We have just 4 years ago, in 2018, we have opened the only trade and economic agency of Israel in West Africa. It is located here in Ghana as part of our embassy, and they have been working tirelessly on creating more business-to-business connections, of introducing sectors of Israeli economy that could be relevant to Ghana and to Ghanaian businesses, bringing in investments from Israel or supporting businessmen with investments to relevant sectors in Ghana. For example, I would like to mention the FinTech Summit that this Trade and Economic Mission has created, initiated, and will execute next week here in Accra. And there are going to be a very fine and long list of Israeli companies with very advanced fintech capabilities and technologies that would be interested in introducing them to the Ghanaian market and to relevant business partners. And hopefully we will see much more exchange in that regard as well, on top of everything else. But of course we need to push further, and there's much more to be done. Indeed.
We shall come to the FinTech Summit shortly, but even before that, I'm quite curious to find out the key priorities that the Israeli government is making when it comes to trade and investment for this year.
When it comes to Ghana, the main focus would be in the sector of agriculture, but as well water management and infrastructure, and to some extent communication.
What about water management? Because we're currently having challenges regarding illegal mining, which is polluting our water bodies, turning rivers to, not being able to use by various communities, and it's really driving away investment, because so many investors feel that they are just throwing your money away, having to see the fact that the fight against galamsey is still not won. So what about water management is Israel really looking at?
There are companies, Israeli companies, that are very interested in introducing their technologies in terms of water purification, and indeed facing this challenge of water pollution when it comes to the work of mines in Ghana. We have been sponsors, one of the sponsors for a major WASH conference that was held in Ghana last year in 2021, and we brought in some Israeli companies. This is again the excellent work of our Trade and Economic Mission, and there is more interest of bringing more Israeli companies in that regard, but we are aware of the challenges. For example, there's a company that is doing analysis of satellite imaging to be able to predict, for example, where there will be floods, and therefore protect the farmers and livestock that work and live alongside rivers and lakes, and we will be able to warn them in advance because they will be able to identify areas that are prone to floods. And they're working also in the Greater Accra area. And this way, when they present their analysis, authorities all over Ghana and the Accra will be able to better prepare for floods.
That's quite interesting. So when are we expecting this company to come on board?
They are already working. They are already
on the ground.
On the ground, yes.
That's
actually in the air.
And they are working in space, actually. But help us understand, because even as you bring in investors in, there is this concern about the rising cost of doing business in Ghana. Inflation is high, highest in the West African sub-region. Even though we are having FDIs increase, we are the second in West Africa to attract FDIs. How are investors from Israel relating to these changing scenes of doing business in Ghana?
This is individually taken, the risk assessment, and each investor has to make his own assessment whether they want to work with Ghanaian partners and to what extent. But we still see a great interest, we still see appetite, and Ghana is still considered to be, very attractive for businesses and investors.
And that's interaction with the Israeli ambassador to Ghana. We have more tomorrow in our second part of the interactions, where she speaks about the pilgrimages and investments to Ghana when it comes to tourism. But you're still watching Business Live. We have more coming shortly. Do stay with us. Yeah, welcome back. Back to our earlier story. Shareholders of Standard Chartered Bank are to be paid 2 cedis 57 pesos per share as dividend for the last financial year. Now, this was after approval of the ongoing annual general meeting of the bank. The dividend payout will represent 48% jump over the year 2020. However, this came with some concerns by shareholders about the amount being paid out and the bank's non-performing loans. We have more in this report.
The dividend payout represents 48% jump over what it paid in 2020. And on cash basis, Standard Chartered Bank has given out 250 million Ghana cedis to shareholders, representing 74% of the profit for last year. However, the bank was prepared to pay 57 pesos per share as dividend, but the Bank of Ghana had to review this downwards to 1 cedi 84 pesos because the Bank of Ghana want the bank to build up its reserves due to the current environment. But this didn't go down well with some shareholders at the meeting.
On the dividend, let me commend you seriously. The proposition you put forward, except that the regulator has a different opinion and had to bring it down. But we thank you very much for that. The auditor has commented on provision or the impairment on debtors, loans and advances. We want the board to work on it. It was a turning issue during their audit work. We pray that this impairment is brought down to the various minimum going forward.
But the board chair of the bank, that is Dr. Emmanuel Kuma, maintained that despite the challenging environment, the bank was able to put some strong profits before tax.
The bank's continuous commitment to create shareholder value remains central to all our long-term strategic actions. Here at home, our Ghanaian economy is also experiencing massive challenges with accelerating interest rates, rapid depreciation of the local currency, rising inflation and cost of living, including energy cost, and mounting public sector debt burdens. By all accounts, ladies and gentlemen, this is a tough environment to operate, let alone succeed. But we are undaunted and do see potential opportunities as the economy rebounds, although slowly, gingerly, and perhaps unpredictably.
But Managing Director of Standard Chartered Bank, Ayitey, later added that the bad debt that has been written off will definitely be recovered.
Yes, I did indicate that the economic environment is quite challenging. However, we'll continue to focus on our priority areas, being the productive sectors of the economy. The real economy seems to be, some of our clients seem to be doing quite well and are quite resilient. And we'll continue to support our clients through this challenging environment and focus on our strengths as a bank.
Standard Chartered Bank ended 2021 with some strong growth in profit after tax of 694 million Ghana cedis, representing a 3% jump over what it had for last year. However, this declined to 438 million Ghana cedis after it had to pay some taxes to the state. This is the first time in 2 years that the bank is hosting an in-person annual general meeting due to the spread of COVID-19 during those years.
We have more stories on myjoyonline.com. Many thanks for watching. I'm Charles Ayitey. Enjoy the rest of our program.